Hello and welcome to Leaders of Tomorrow, India's only daily television platform for small businesses. Over the past many years, we've understood what matters most to you, the entrepreneur. And in year 8, we're taking head-on 2 of your most pressing concerns, that of funding and mentoring. I'm Sunanda Jayasseelan. On the show tonight, we're bringing you some of the key takeaways of India's best CFOs and money managers. I grill them on the changing role of CFOs in India today, what CFOs of small businesses should keep in mind when it comes to the biggest opportunities and challenges, and also what perhaps are some of the hygiene things small business owners like yourself should keep in mind. Here is what India's best CFOs and money managers had to say. First up, I want to introduce to you Pramod Menon, Group CFO, RPG Group; Kedar Upadhyay, Joint President and Global CFO, Cipla; Anjali Bansal, Non-Executive Chairperson, Dena Bank and Chair Niti Ayog's Women Entrepreneurship Platform; Joydeep Mukherjee, Senior Advisor, Wadhwani Advantage and Founding CFO, American Express GIO; and Rajiv Kapoor, VP, Financial Shared Services, India CSR Champion, Dell Technologies. It's my privilege to have each of you eminent experts on this panel talking about how really the role of finance has been changing, talking about how the role of the financial professional really has been changing, and to give the best possible insights to our entrepreneurs on the CFO Masterclass. I want to kick this off by really talking about how the role of finance has changed over the past few years, given that each of you has such varied and deep experience in this field. Open to all of you on this panel, but Pramod, maybe I can come to you first and ask for you to talk about very briefly how the role of finance has changed and how the role of the finance professional has been changing, and what do you think has been that biggest change? What really is contributing to that?
I think the biggest change, the panel sitting out here all have, more than 2 to 3 decades, and over this period what we have seen is India in itself completely going through a big change, whether in terms of capital availability which was there or in terms of technology. So let us say the role of a CFO, if I were to look at about 2 decades back, was more, let us say, around operational related issues, which has moved around, let us say, more in terms of strategy. Today, he is more in terms of a business partnering kind of a role. He is, let us say, today required to wear the hat of, let us say, the change or influencer in terms of change leadership is concerned. Sure. So those are, let us say, the biggest shifts that I have seen as far as the CFOs are concerned. And overall, let us say, he becomes a very big strategic player along with the CEO in terms of strategizing and evaluating on the capital allocation and the risk strategies. Sure. So broadly, if I were to frame it, we have seen a significant shift over the last, let us say, 2 or 3 decades in terms of the role that the CFO is playing. Okay.
For the rest of this panel, if you could pick either a startup or an SME, anything that this perhaps is why it's changing as well. This is open to all of you.
Yeah, just to add to what Pramod said, I think what has happened in this period is finance department is increasingly pivoting itself to strategy and value. And we have always heard that, finance is a custodian of the company. What has happened over the last 2 decades is, be it digital, be it the push from capital markets, I think the departments are increasingly pivoting the whole decisions in the company. Be it every single business decision to get into a new line of business, be it a decision on talent, be it a decision on investment, capital allocation, or portfolio. Sure. I think, the troika of growth, profitability, and return on capital employed. Finance is anchoring that conversation and those decisions and that, awareness creation in the company very well. Okay. And I'm really happy across 4 companies in which I worked, this single pivot that you have to have a partnering mindset with the business to establish a strong business model, which ensures consistent cash generation among ups and downs in the environment and internal decisions. Sure. That really gives a lot of satisfaction to the teams.
Sure. Okay.
Sunanda, I would say finance has moved away from conscience keeper or governance, or even from a strategy planning, to being a business leader, to someone who gives direction to the company as to which way the company should go, given the resources, given the capital, given the priorities of the company. The finance is no longer going to sit back and say, could we do this, could we not do this? They are going to drive that change. They are the ones who are leading the parameters down and saying, why not this? They are challenging the organizations to go beyond their plans and business plans and said, if I can provide the resources, if I can provide the appropriate governance structure, then why not should we not go this? So they're opening up opportunities rather than just setting a framework and a structure. The whole paradigm has shifted for finance.
So again, I think all good points over here. The only thing that I would like to add, especially coming from Dell, which is like, even after 30 years of existence, we are one of the largest technology companies. We still call ourselves the world's largest startup. It's also about providing that intelligence to the business and showing that whole analytics about whatever we said about return on capital, or really kind of making that strategy come to life.
Sure.
And I think that's where a CFO, in addition to really kind of managing the governance and the reporting and all of those other fundamental things, is now a partner in kind of operationalizing the strategy of the company.
Okay, thank you.
So I think much has been said about the CFO journey and the function. Finance used to be a function.
Okay.
Today, finance is a key enabler, business partner. The finance leader in the organization actually has a very strategic role to play, going beyond just the compliance to actually the governance of the company. What should be the strategy of the company going forward? I think you mentioned the use of information and data. Today, most companies, big or small, and we can talk about the MSME startups also, actually rely a lot on data, the analytics, and the insight, i.e. the intelligence that comes from there. And often the finance team is the custodian of it. I would say finance has gone well beyond a function to being an absolutely integral business partner. We see more and more CFOs actually sitting on boards. And so they are given a seat at the board table. And our advice to all our startups and MSMEs is invest early in building your finance capability.
Okay, I do want to address the role that technology and digital really has for the life of the finance professional today. Kedar, I want to come to you first. Previously, you've said that you're using technology and digital, and it's very strategic for you. The decision to use it is strategic. You're using it everywhere: manufacturing, product development, on-ground activities, etc. For someone watching this panel, if you can help them understand how a large organization like yours has been able to move quickly when it comes to using technology and digital, why it's crucial for small businesses. Are you seeing enough of that happening?
Absolutely. I think the first thing in going digital is having a vision, having a tone from the top, and the executive council and the management council fully endorsing this agenda. Then comes obviously capital allocation. You have to put capital behind this energy. And then it comes to mapping out needs across your development, across your manufacturing, your sales and marketing, your functions like finance, HR, and identifying what's the real need. You don't want to implement a gadget. You don't want to implement a jazzy tool which nobody will use.
Sure.
So I think what we have done is we have established what is the underlying need, and we have established what are those metrics which will give us comfort to ensure that whatever we have implemented, whatever digital interventions have been done, those are the real ones who will benefit the stakeholders.
Sure.
So I think we started the journey. Every company would start from data and your data lake and stuff like that, and over time you go to your go-to market, your manufacturing comfort, your compliance comfort in development and manufacturing, and then eventually translating all this to value.
Sure. Rajiv, I do know at Dell you have something called the 2020 Legacy of Good, which is to drive human progress through technology. If you can use that and really talk to our small businesses watching this interview to say, this is how you should be doing it.
Yeah, and again, I'll start from the purpose of the company itself.
Sure.
And I think that's one of the very, very key drivers at Dell, and I think at any other successful companies, to really have a clear purpose. And then for Dell, it is to really kind of create technologies that help human progress. And again, that's something that we really take very seriously. We, first of all, share that across the 140,000 employees in a very, very transparent fashion in terms of how it translates for them. We've had the legacy of 2020 goals, which we have already overachieved in 2018 itself. So now what we are really looking at is something as a goals for 2030, which we call as progress made real.
Sure.
Some of the things that we are trying to do is really making sure that whatever we are doing, we are doing it in a responsible fashion, right from our suppliers to our customers, in a circular economy.
Sure.
Making sure that we are really trying to kind of have the whole environment factor in place. We're trying to use technology for driving all of these. We're trying to have inclusion in everything that we do in terms of whether it's the work power, it's the inclusion of all kinds of environment-friendly stuff for our products manufacturing, recycling from our products. I think all of that is where Dell is leading the pack from an inclusion perspective as well.
Okay.
And what we're really trying to do is make sure that technology is playing a key role for our customers.
Sure.
In terms of the way we support them, the way we support their critical infrastructure on which a lot of banks or any enterprise is running. A lot of those places are now becoming completely automated, and we've got proactive approach rather than a reactive when something gets broken. So I think a lot going on over there.
Okay. I'm going to slip into a very short break on that note. Much more on the other side. Just stay tuned. Welcome back. You're with us here on Leaders of Tomorrow. Tonight, bringing your masterclass on finance. I want to move away from technology and talk about what's really happening in India, both in terms of NPAs as well as what's happening in terms of the economy. My first question is to you, Joy. Vadwani Advantage data suggesting that 60% of the sampled representatives that they've looked at, about 45,000 odd SMEs, have recorded ROEC negative 7% to plus 4%. Return on capital employed, EBITDA margins of negative 3% to about plus 10%. This is in the 3 quarters that they've looked at. So, what's really happening?
So this is a reflection of poor capital management,
Sure.
Poor investment in business planning and tools, and not really monitoring managing the business the way it should be managed.
Okay.
They have been managing more on the results and output on a monthly basis, rather than saying, for this result to happen, this activity should have happened 6 months ago. And instead of monitoring the result right now as US dollars, I'll monitor whether those 100 activities happened 6 months. Because if that happened, then this would have been a resultant.
Okay.
So the whole mindset of capital management, lack of integration of seeing the business as a whole, and just not managing the business properly.
Okay, Kedar, I see you're agreeing with what Joydeep is saying. Where, what really is going on? Where do you think the missing pieces are? What is hygiene for small businesses?
Yeah, see, I think the startups and small businesses, what they have to do is they have to avoid both type 1 and type 2 errors. Type 1 error is when there is a very thriving, fundamentally sound business model, but you're not investing enough. So in that business, you have to invest enough, and there might be a gestation period for the business to turn around.
Okay.
And type 2 error is when the business is not sound, but you are investing too much required or too much ahead of time. So I think when you are a startup or a small and medium sector company, the capital allocation has to be looked at very nicely, and you have to tie up with the business model per se, and you have to avoid both these kinds of errors.
Sure. So Joydeep, is it a question? Yeah.
Just one thing to add to exactly what Kedar said. And you have to have this flexibility and agility built into your processes. It's not that you come to the month end and you realize what's happening. You have to have this as part of your culture, as part of your DNA to manage it, because capital is extremely tight. Decisions have to be made right now with full knowledge, information. And that's where the gap is.
Okay.
I was just going to add that I think operational discipline, what I mentioned earlier, and irrespective of what's the kind of bank balance you have, what's the kind of cash you have in hand, I think operational discipline right from the beginning, despite it being a very creative business model, is always something that really a MSME or a startup should really very, very carefully watching.
I will support that. Actually, we're saying one is, yes, absolutely operational discipline is key for both large and small businesses. But in today's more digital fintech type environment, there's also a lot of regulatory support. So the ability to do an eKYC. So whereas same thing is happening in large banks may not have the agility to always be able to onboard small companies and use digital channels. We are seeing the rise of fintechs that are able to actually do that. They are able to take advantage of the stack, the UPI stack, and the eKYC models. RBI has announced a regulatory sandbox around these initiatives as well. So I would actually encourage SMEs and MSMEs, startups do this all the time, to explore these alternative channels also.
Okay. My question to you, Joydeep, is, and this came up earlier in the panel, how do you balance growth and profitability? And maybe you could also pitch in, Anjali, and talk a startup sort of specific angle.
This takes me back to my day. When we were young, they used to ask, do you want growth or do you want profits?
Okay.
And the right answer used to be yes. And right now, what they say is, do you want growth, profits, and make a contribution to society?
Okay.
Because today's modern consumer will reward you for that.
Sure.
And that's why those socially aware companies do so much better on their valuations and share prices. But how you balance it is growth for the sake of growth. Those days are gone. Everybody has realized that is not something that they should be going for. Neither is that focus on let's cut costs to the bare minimum and try to eke out a profit at any point of time. Both of these don't work. You must have scale, you must have growth, but you must do it profitably. And to do that, sometimes you have to raise your expenses. If your business model is, for example, insurance, and you're selling mutual products, the ULIP products.
Sure.
Your ULIP products are sold based on the returns of the funds. So you get the best analysts in to get you the best returns, which in turn gives you the best consumers, the best markets, and the best. So it's a virtuous cycle that happens. But if you start focusing on and choosing the worst or the lower paid and the whole cost structure, then you're compromising the entire cycle over here.
Sure.
So you focus on growth, because without top line, there is nothing that percolates down, but you do the growth in a way that's profitable.
Okay. Same thing you're seeing with startups?
Startups, I think, require an upfront investment period where it is perhaps a less or no profitable period in order to get the trade-off of accelerated growth.
Sure.
That said, ultimately, if you want to build a sustainable business, and I think most entrepreneurs are driven by solving large problems, building large businesses which are sustainable. At the heart of it lies a profitably scalable business model. So there is no going away from having a robust business model which is capable of generating profit. Then the choice of whether you press the pedal on growth or you press the pedal on profit is a strategic choice that not just startups, but even big companies make from time to time. Whether they're, if they're going through an M&A or they're going through a large global expansion, new product line, big companies make similar choices.
Sure.
I do want to, if I may, spend a minute on the notion of creating social impact. Today, I think large companies do that. In India, I think we have more than anywhere else companies that have a very big social purpose. The Tata Group is one of them. There are others represented here. Supply is one of them, as is RPG. But similarly, we are finding that in the startup ecosystem, companies that scale responsibly are creating very large job footprints.
Sure.
They are formalizing large parts of the economy. So that's not part of the valuation per se, but those are very positive, unintended externality and consequences.
Okay. I just want to talk that, sort of take that point forward as far as growth and profitability is concerned, and this is for the entire panel. But maybe Pramod, Rajiv and Kedar could largely comment on this, and this is the fight, if I can call it that, between working capital and investing for the future. Is it sort of clear cut? What's your advice for businesses?
At Dell, we follow something which we have been really kind of following from a long time, is a very, very simple triangle, which is around a balance between liquidity, profitability, and growth. And again, whenever we start any of our business reviews, this is something that's been driven right from our CFO and Michael himself. For every business, we really try to look at the balance of all the three.
Sure.
Now, if I were to really look at Dell Technologies, we've got portfolio which are really, really becoming more commoditized, low margin business. And then there are obviously the technologies of the future. So the way we have been really looking at it is, how do we make our existing, more stable, which is now becoming a commoditized business, a lot more profitable? We challenge ourselves in terms of driving savings, driving efficiency, and how do we plow that back into the real investment? And if I were to just give a number over there, over the last 3 years, we've invested close to $13 billion in R&D.
Sure.
And that's how you really then become future ready. That's how you can then invest in a higher margin product portfolio and the product lines there.
Okay. Given what's happening globally, IMF saying that synchronized slowdown is what is happening across the world. 90% of countries will be impacted. We're seeing the GDP forecast here in the country. My question to you is if you could use your closing comments to tell small businesses this is how you should prepare for the new normal if you are in the finance space, if you're a CFO.
Well, I would tell my friends from the small and medium sector to be positive about growth of tomorrow. Don't stop investing in these days. Okay. I mean, at Cipla, we have running 5 large programs. At times, I wonder, but I know that unless we invest today, the growth won't come for tomorrow. Okay. So similar advice I would give to my friends there, that pursue a journey of investment, pursue a journey on digital, but capital allocation is important, and whatever you do, pursue in moderation. And this portfolio of various ideas within the startups and various businesses of where to accelerate, where to pause, and where to actually get out and divest, that should always be there dynamically after every, let's say, 6 months or so.
Gentlemen, Anjali, thank you so much for your time here in the studio with us.
Thank you, Sunanda.
Thank you very much.
Thank you very much.
All right, that was a masterclass on finance and managing your finance for small businesses. As we're ending tonight's show, we're excited to bring you an in-depth fact capsule in association with our knowledge partner, ODUP, the most trusted platform that analyzes startups, their trends, as well as future evaluation. This weekly capsule bringing to you the most incisive information on everything you need to know about all the hottest startups this week. We're bringing you the ODUP India 100 Index featuring the top 5 gainers. Take a look.
Here are the top 5 gainers of the past week. This data is plotted as of 12 November 2019. First on the list is Mumbai-based finance startup Mintifi showed an increased return of 49.1%. Bengaluru-based education industry startup Vedantu is the second company on our list and showed an increase of 6.62%. Education industry startup Topper, based out of Mumbai, showed a return of 4%. Let's now take a look at the last 2 startups on our list, both based out of New Delhi. First is the food and beverage industry startup Bira 91, showed an increased return of 3.86%. And finally, finance industry startup ClearTax showed an increased return of 2.8%. That's a wrap of our ODUP India 100 Index for this week. We will continue to bring you the most in-depth content on the startup space week after week, right here on Leaders of Tomorrow.